Asian stock markets are on fire. Japan, South Korea, Taiwan. All three markets are touching record peaks. The reason? The U.S. Federal Reserve is preparing to cut interest rates again. This cycle of rate cuts is sending a powerful wave through global finance. Borrowing costs are expected to drop worldwide. Bond markets are breathing easier. The dollar is under pressure. And investors are celebrating. On Wall Street, the Dow Jones, the S&P 500, and the Nasdaq. All three closed at record highs. A clear sign of confidence. AI-related earnings expectations are also driving this rally. Technology is once again leading the way. The latest U.S. inflation numbers came in softer than expected. The Consumer Price Index, the CPI, showed manageable growth. More importantly, the costs that feed into the Fed's preferred measure, the core PCE, were on the soft side. Economists at Citi now predict a steady reading of 2.9% for August. Veronica Clark, an economist at Citi, says, "It's an encouraging signal for Fed officials. We continue to expect 125 basis points of rate cuts over the next 5 FOMC meetings. And there's a growing chance the Fed will push rates below 3%. Right now, markets are pricing in a 100% chance of a rate cut next week. The Fed funds rate is expected to fall to 4.00 to 4.25%. And traders now see a 90% probability of 2 more cuts before the end of the year. Bond markets are already reacting. The U.S. 10-year Treasury yield has dropped by 20 basis points in just 2 weeks. That's effectively a rate cut. Because mortgage rates in America are tied to Treasury yields. This decline is calming nerves in Europe too. European bond markets have been under pressure from politics and from rising fiscal burdens. But now, relief is spreading. Let's look at Asia more closely. Japan's Nikkei climbed 0.6% to another all-time high. This week alone, the Nikkei is up 3.7%. South Korea gained 1.1% today. And more than 5% this week. China's blue-chip stocks added 0.2%. Hitting the highest level since early 2022. And MSCI's index of Asia-Pacific shares outside Japan jumped 1.2%. The momentum is strong. The optimism is global. Europe is also catching the wave. Futures on the Euro Stoxx 50, the FTSE, and the DAX are all up by 0.3%. In the US, futures on the S&P 500 and Nasdaq are flat. But that's after hitting brand new peaks overnight. Currency markets are steady. The dollar is trading at 147.23 yen. After touching 148.20 yesterday. Finance ministers from Japan and the US issued a joint statement. They made it clear. Neither country will target exchange rates in their policies. The euro is holding at $1.17. It got a small boost after the European Central Bank meeting. The ECB kept interest rates unchanged. And they said the policy stance is now in a good place. Greg Fusisi, an economist at J.P. Morgan, explains. This means the ECB will not cut rates again. Unless there is a major growth shock. We now expect the final cut to come in December, not October. ECB insiders told Reuters the same. December is the most realistic timeframe for another debate on easing. But markets are skeptical. There's only a 20% chance of a December cut. And a 60% chance that the ECB is done with rate cuts altogether. Now, commodities. Gold is holding steady at $3,633 an ounce. That's just below the record high of $3,673. Set earlier this week. Oil, however, is sliding. The International Energy Agency is predicting a record oil surplus next year. OPEC continues to pump at high levels. Brent crude is down 0.4% at $66 a barrel. U.S. crude is down 0.5% at $62 a barrel. This is the state of global markets today. Stocks at record highs. Bonds recovering. Currencies stable. Gold near all-time highs. Oil under pressure. Investors are watching one thing above all else: the Federal Reserve. The countdown to the next rate cut has begun. And its ripple effects are being felt across every market in the world.